All right, welcome everybody. Thanks for coming out. My name is Rick Haas. I'm the head of investor relations. I have a background, 12 years on the buy side, 5 years sell side, and I was an Air Force pilot before that. So I'm new to Taboola. So it's nice to meet you. Grateful for everybody to come out today. We should have it should be a great information session. I think a lot of great discussion points we're going to hit today. So unfortunately, I have to read the safe harbor statement. Certain statements today, including our expectations for future periods, are forward-looking statements. They're not facts and subject to material risks and uncertainties described in our SEC filings. These statements are based on currently available information, and we undertake no duty to update them except as required by law. Today's discussion is also subject to the forward-looking statement limitations in the investor presentation. Future events could differ materially and adversely from those anticipated. During today's discussion, we will use terms defined in the investor presentation and refer to non-GAAP financial measures. For definitions, explanations, and reconciliations to GAAP, please refer to the appendix in the investor presentation posted on our website. So thankfully, I didn't have to read that one. Anyway, I'd like to introduce Adam Singolda, our CEO.
Thank you, Rick. 4 weeks on the job, and look at you now. Good morning, everyone. Thank you for coming in. I knew some of you took a flight in, so I appreciate that. Thank you for the folks working from home on Zoom or wherever you may be, not judging. Thanks for joining us, and Jim and Monica as well, who will join us today. So before I kick this off, just a personal story. Today, as I was preparing for this day, my son, Ozzy, who is 5 years old, asked me, "Dad, why do you have a button shirt on? What's going on?" Because us Israelis, we don't really wear button shirts all the time. And I told him, it's a big day for us. We're discussing a 30-year partnership with an iconic brand, Yahoo. We're going to talk about, generating over $1 billion in revenue a year. And he asked me that one question you hope your son and your kid never asks you, which is, "Dad, what's $1 billion?" And I told him, you know what? You can figure that out when you work at the renewal in 30 years. So on that front, so excited to be here today. We have a packed couple of hours. I will kick it off with just a vision and mission of Taboola, the partnership with Yahoo, obviously, how we believe we can double and triple that over the next many years. We'll have a fireside chat with Jim and Monica, who just joined our board. She's Yahoo CFO. Eldad, our president and COO, will walk over the integration and how we bring this dream to life and capture that value that we're so excited about. Steve Walker, our CFO, will kind of summarize the daily messages, the financial implications, and we'll have a Q&A at the very end. So starting with, just a recap of Taboola, I started the company 15 years ago because I couldn't find anything to watch on TV, thinking I should not be looking for TV shows. TV shows should be looking for me. We'll never have enough time to read all the books we want to read and watch all the movies we want to watch. There needs to be a recommendation engine that helps us to discover things we love but we never knew existed. A lot of time we're thinking of ourselves as a search engine, but in reverse. Instead of expecting people to search for information, information should be searching for us. Even Google founders back in the day said that the perfect Google would be an empty page. Now, the truth is that all of you here, or chiming in on Zoom, you're using recommendations all the time. In fact, you can't imagine your life without it. You're using recommendation engines when you watch TV, or when you shop online, or when you listen to music, or of course when you spend time on social networks, if you do that. And that's exactly kind of the mission that we have at Taboola. We want to bring the similar relevance and the personalized experience consumers have on walled gardens to the open web, so that every publisher, every app, every connected TV app, every service that lives outside of the walled garden can enjoy a recommendation engine, much like we experience on social networks every day. Now, the open web, it's a huge market. It's a $70 billion market opportunity for Taboola. And there's a lot of good things around that market. The first is that people spend 25% of their time in the open web, which is more than search and more than social in aggregate. So the opportunity to create an amazing experience for consumers is immense. The second thing is that with the rise of privacy, which all of us have been tracking dearly, since 2017 when Apple launched ITP, making third-party cookies deprecated, or last year when on apps with IDFA, you can't track consumers between apps, that just makes the whole need for the advertiser community to find and rely on a contextual engine that they can trust and be here for the rest of time. Like I always say, our children will be shocked that during these days, companies used to track consumers between app and browsers, and that's a bit creepy. So the future is bright, the future is private, and we believe that's a great opportunity for the open web because by definition, the open web is private and safe. It's about what I'm reading as a proxy for who I am versus my identity. Now, if you think about it, if you want to buy the search, it's very easy to buy Google if you're an advertiser. If you want to buy social, it's very easy to buy Facebook as an advertiser. But if I gave each one of you $10 and I asked you to spend money in the open web, it's a shit show. You have made dozens of companies, small cap companies, maybe hundreds of millions of dollars, maybe $1 billion in revenue, each their own ad console, their own formats, their own philosophy, their own account managers. It's really, really hard. So it's a huge market, but it's very fragmented. There is no Google for the open web. There is no Facebook for the open web, a company that can simplify the process of spending side by side to journalistic content that is safe and private and awesome. That company has yet to exist. The second problem is if you actually do spend money in the open web, that's what you're getting. You're getting a banner experience. It's something that's in my way. I'm reading an article, it's in the middle. I'm trying to watch the video, it's before the video. It's in my way. It's not the experience I'm seeing when I spend an hour or more on social networks. The banner format was invented 30 years ago when DVD and Tamagotchi were invented, and it's still around, like dinosaurs. So when you think about trillion-plus dollar companies like Facebook and Google and Amazon and Snap combined, what you see, which is very distinctive from the open web, is that you'll never see a banner on Facebook. You'll never see a banner on a search page. You'll never see a recommendation and a banner below it on Amazon. And you'll never see a banner on Snapchat. They're all native advertising. What does it mean, native? It means that the core value of their service, whether that is a post on Facebook by my friends and then a paid post below that, whether that's a search on Google and a paid search below that, whether that's a recommendation by Amazon to a product and a paid recommendation promoted by a retailer, it's all native. The core reason I'm on that service is the way they make money. There is no banner or something in between. And that's the revolution we're trying to bring to the internet. So that in 10 years, when you open the internet, the open web, which we all love and use all the time, it feels like this company. We want to bring the walled garden superpowers to the open web. Now, of course, we're all here to talk about what could be the most amazing partnership and relationship and deal in the history of the internet. I would think so. And I know it's only 10 a.m., but it's 5 p.m. somewhere, and we're very excited about it. Now, as a quick recap, there are three kind of parts to that partnership. The first one is thousands of advertisers that currently buy Yahoo natively and will be transferred to the Taboola technology. You also have contextual segments. So we spoke about privacy and opportunity to make the web contextual and safe and relevant. So with the combined technology and data of Taboola and Yahoo, we can do that, and I'll talk more about it later. And the third one is, of course, powering the variety of sites that we all use and love on Yahoo. Now, Yahoo is already number one or number two in everything they do. It's the number one finance website. It's the number one news website. It's the second mail service. It's the second sports website. So people already love Yahoo so much. Almost 900 million people go to Yahoo and spend a lot of time and engage with those amazing properties. So if you think about what happens when we're fully ramped, Eldad, our CEO, will speak about the integration and the migration from where we are now to 100% launch on Yahoo. So what happens when when we're on the other side of it? I spoke earlier about the simplicity of buying social, buying search. Imagine you're in one place, one home, one dashboard, one technology, one account management team. You can buy all of this. You can reach Yahoo, which is an amazing reach and quality and scale. But side by side to that, you can be on NBC, CNBC, BuzzFeed, USA Today, BBC Today. You can reach the world. Taboola is a very global company. And that is such a huge step function from where we are now. Because you see, we used to be here. before launching Yahoo, before making that partnership. We used to be side by side to smaller companies. Maybe $1 billion in revenue, maybe a little less, a little more. Small scale company. Good companies, smaller. Of course, you have the Amazon, the Facebook, and the Google, bigger companies, must-buy companies, search, social, retail. But then you have the middle tier, kind of like the single-digit billions of dollars scale. So advertisers say, of course, we'll have the 3 must-buy, but we'll play with these people because they're almost must-buy. They're almost there, right? So you'll have a Trade Desk partnership, a Twitter partnership, a Snap, Pinterest, but now you'll have a Taboola with Yahoo partnership because it's big enough that it's worth it. It's a almost must-buy. You're getting to the zone. Like we used to be here, and now we're in the West Village. I'm a New Yorker. So we're in the West Village. It's a great neighborhood here. So, and that is such a big deal from a scale perspective, but even more, we're the only company on this slide, the only one, number one, the only one, that is actually truly native open web. We can create advertising experiences on the publisher side because we work with the publisher directly. We don't buy traffic on publishers. We are publishers. We're native. We take the trash out. We do laundry. We're roommates. We are open web. So we have both sides of the marketplace, which allows us to innovate and change the way the open web looks like versus guests who come and bid and show ads in the open web. Now, if you follow our journey as investors or analysts who joined us since we went public, you know that scale is important. And the reason it's important is because when you get more publisher and more reach, you get in front of more consumers, which means they interact with your engine more, which creates more data generated, which improves your yield with advertisers, which contributes a buying power. When your yield gets higher, it means you can win more publishers, and even at a better margin over time, and this flywheel network effect gets created. Our gross margin has been doubled over the last 7 years as we became from the smallest company in the space to the biggest. So that is important as we think about scale. Now, I would say that we're speaking about $1 billion in revenue in 30 years. I will tell you, spending time with the Yahoo team, Jim and Monica and Elizabeth and Matt and Ryan, and I can tell you, every time we spend time together, we feel stronger and better. We're off to a great start. Antitrust closed the deal earlier than we expected. That was great. Our tech teams are now having an offsite, planning the future, planning the short term, the midterm, and the long term, how it's going to actually take place. And every time we're kind of reconvening since the deal making up until now, it's like the Sia song, we feel unstoppable. It just feels like there's so much cultural fit that will allow us to innovate and build something great. So our dreams don't stop at what we're seeing in front of us. We think that there's so much growth ahead of us beyond the billion. We can double and triple that, I believe, over the next many, many years. So to give you a few, this is one of them. One of them is just continue to innovate on the user experience and ways consumers interact with native advertising on Yahoo. So you can imagine video formats, story formats, and other things that consumers are used to see in other places. We have an opportunity to innovate and A/B test and see what works for consumers, what works for advertisers, and we have a great team to do that with at Yahoo. The second thing is contextual segments. Like I said, I don't believe privacy is going away. It's going to get more aggressive. Consumers should be safe. They will not be tracking when I'm not part of you getting consent to track me. That means that the future is going to be so much more about this curiosity graph. What am I reading and what is it connected to? The proxy for who I am, driven by my readership versus my identity. And if I'm right on that one, the future for Yahoo and Taboola is great because we can help advertisers be successful, reaching a lot of people with great contextual segments we'll be launching and working on for the next many, many, many years. The next one is header bidding. If you listen to our earnings call, you know that's one of the top priorities for Taboola as a company. Now, what is header bidding? As a quick reminder, it means that you're able to bid into a display spot. This is display. It's not our core business. We're a native advertising company, but we're able to use our first-party data and CPC advertising relationship to maybe win 5 or 10% of this, which is great for publishers because we're increasing the auction density for the display space. It's great for Taboola because we estimate that on our existing publisher base, there's about $20 billion of display revenue. If we can take 5, 10% of it, it's great. It's great for us, great for our publishers, great for our advertisers. We can only do that because we have a lot of first-party data and a lot of CPC advertisers, now with Yahoo even more. So that's one more thing we can work with Yahoo on as part of our header bidding strategy. On earnings call, I mentioned that for the first time, we're seeing, this is a startup, it's been around for a year. We're seeing a few publishers generating millions of dollars a year on top of the core publisher relationship we have with them. So this is obviously a big opportunity for us and a big one specifically with Yahoo. Last but not least, you know I love e-commerce so much. You know, we're working from home, we're buying from home. We need a trusted place to review products, review financial services. I'm convinced that the head of the market publishers will become huge e-commerce, financial services, travel, healthcare organizations because people want a trusted advice. They want to know, what should I buy? Became a parent, which mortgage should I take? What strollers should I buy? What's good for my house? I can't go to the stores I used to. Maybe I don't want to go to the stores I used to, but I trust Yahoo. So this is an opportunity for Taboola and Yahoo to partner up and rethink e-commerce as we combine data and technology and help consumers make some of the most important decisions of their life online. So as I finish my part, I'll say that we're very excited. We're off to an amazing start. There's a great cultural energy between Taboola and Yahoo. It's been great to work on the partnership when we did it. It's even better now doing the work. Our tech team are now spending time, planning, thinking about milestone, all that good stuff, which is great to see. We've shared some numbers for 2024. Steve is our CFO. He always wants me to be conservative. These are the numbers we put out there saying basically we will be ramping starting the second half of 2023 into 2024. It will be 100% live no later than mid of 2024. Of course, we hope to beat that and share with you as we go how we're making progress. So the force is with us. I'm excited. Thanks for coming in. And on that one, I'll invite Jim and Monica. Thank you. Yeah. So I'm honored to invite Monica, our new board member, Yahoo CFO, and Jim. I know Jim for a long time. Well, you should take us.
Oh, yeah.
Yeah. All righty then.
Shall we get started?
Let's do it.
Hi, everybody. So Adam introduced me. I am Monica Mieleski, Yahoo's Chief Financial Officer. Really happy to be here moderating this discussion between two people that I now get the chance to work closely with and partner with. So we're going to go straight into it.
Yeah.
I think the first question, easy one before we get into the details of the partnership. Maybe if you could both speak to how you guys know each other, how you guys first met.
Sure. You want me to hit it?
Yeah.
Well, look, historically speaking, for those who don't know, I ran a company for about 9 years called CBS Interactive, which was the digital division of CBS, but it really we were a top 10 internet company. I think it's ranked 6th still. Had things like CNET, CBS News, CBS Sports. We created CBS All Access, which is now Paramount Plus. So it was a very big network of 200 million plus users in the U.S. And I got there in 2011, and shortly thereafter we shifted from Outbrain to, of all things, Yahoo's new Gemini product.
That's true.
Ironically. And so a couple years later, we then made what was now the first of 2 moves I've now made from Gemini to Taboola. So, got to know Adam and the company over many, many years before we made that switch.
Yep. So it's been, I think, 7 years now?
It worked great, by the way.
Thank you.
Yeah.
We intend to meet and beat expectation.
Yeah.
My part, yeah. So my part was I was invited to a toast. It was CES. So the guy we worked with at CBS, Jason, who's a great guy, said, "You're gonna meet Jim." And it was CES. We went to Take 5, take 3. Luckily, it didn't happen in my party.
Yeah, I know, exactly.
At least we
We
shared
got
the
the
paper.
important ones out of the way.
We usually save this for Eldad.
I know. Bill Gates had blue screen. You need some sort of an IT challenge as part of any
Yeah, was
great.
this your Starlink connection? That's what
Yeah.
happened here?
Yeah, can't afford that. It's very expensive. We're back. Yay. So my story is that outside of meeting Jim, I'll say that the one thing that was great for me as a founder, first-time CEO, was to spend time with someone that was so down to earth. Back then, and still is, CBS is a huge partner of Taboola, and it's great to see culture at a bigger scale, so humble, straightforward, business-oriented, and still dreaming big. And I think as our reintroduction at Yahoo, we kept in touch, but I mean, being reintroduced to the new Yahoo and the new management team, the one thing that makes me feel good about this, beyond the numbers we shared with you and the size of Yahoo, is the cultural fit between the teams, how straightforward we are with each other, transparent. If you saw the 24 hours leading to the signature of that partnership, FaceTiming at 4 a.m. and really talking to each other, it was awesome. So more than anything, especially as you imagine a 30-year partnership, culture and people means even more than anything.
Totally agree. So next question. So the news of the Taboola partnership obviously was announced a couple of months ago. So Adam, can you speak to how the news has been received by the investor community, by the Taboola employees and your partners?
Yeah, it was a combination of things. We had people that were immediately happy, advertisers. They were basically asking when, and when we said, be patient, they said when, and then they said when again. So advertisers just wanted bigger scale. I was just speaking on my presentation about how much I think advertisers who buy Google for search and Facebook for social are looking for just a big scale home to spend, something they can rely on. And so that was exciting to advertisers quite immediately. Publishers, we got some happy calls and some FOMO calls. People said, will you be spending all your time with Yahoo? How will you love us? What's going to happen? And we said, no, that's great for everyone because this will increase the bar on our opportunity to monetize as a company in general. And we'll work together on more technologies. I mentioned contextual segments. So there's going to be a lot of good things coming out of that relationship that will influence, I hope, the rest of Taboola and our publishers. And employees were really happy because I think people tend to love being part of a winning team. And I think Taboola and Yahoo are winning teams, and now even more together. So that was kind of the employee community.
Awesome. And I can say that the sentiment was also the same with respect to the Yahoo employees. There's a lot of excitement. So Jim, going a little bit deeper. So the 30-year exclusive deal has been described as somewhat being unusual. Yep. Can you speak to why Taboola was the right partner, and how are you thinking about how the actual deal come about?
Sure. So I think everybody here probably knows, but Yahoo was spun out of Verizon in September of 2021 by Apollo. I was brought in that same month, and we got to work with new team, new strategy, and look, Yahoo is is in a new era now. Is an extremely strong company with billions of revenue and profit, hundreds of millions of users. But there was a lot of things that needed to be optimized. One of which was the way that we went to market with our ad tech group, which was now in hindsight we did the Taboola deal first, but we had another announcement about a month ago about essentially our strategy to simplify and thereby strengthen the way that we go to market with our advertising products. We were historically doing what we called a unified stack of essentially doing every part of advertising in this full stack approach, which really led to us doing some things extremely well, like our DSP, which is world-class, and other things like our native business, trailing the market leader. And so by partnering with the market leader, instead of producing that product ourselves, you get a lot of things that are great for Monica and I running Yahoo, right? One is we're certainly going to make more money, and it's higher yield with clearly lower cost. And at the same time, extremely important for the future of where we're headed, a way better user experience, because you have thousands and thousands of more advertisers competing for that space. So it was a no-brainer to me to make the switch to Taboola again. Again, the market leader in the space. But we also bring unique value to that, and so that led to us being very enthusiastically now the largest shareholder of Taboola. And then you think about, well, neither of us wanted to think about that in the short term. We don't want to be in a position where either of us are doing the wrong thing, either for our user experience and our advertiser base, or for us, putting the wrong pressure on the company. You want to be aligned for the long term, right? And so we couldn't contractually put in till death do us part or infinity. So 30 years, becomes a really good way of putting a marker on that and making sure the companies are thinking long term all the time.
I did bring it up, the infinity, but Apollo was not into it. I thought that's a bit much.
Put the symbol in the contract.
It did come up, but yeah.
That's right. So.
Thanks, Jim. So over to you, Adam. So notwithstanding the commercial deal, the actual deal itself means that Yahoo is a significant shareholder. Speaking for myself, as now part of the board member, which I am super excited about, but really wanting to be focused and really engaged in trying to drive value for Taboola investors. How and why should investors be excited about this?
I think for two reasons. One, financially, it's a very creative partnership already. As this thing is going to be live, and you'll hear more from Eldad later about integration planning and all those things. Once this is on 100% of traffic with advertisers successfully migrating, this is very creative to all the metrics investors care about. We mentioned, over 40% of revenue per share, almost 5 times our free cash flow. And that is around the corner. This is not long-term planning. This is within line of sight. And we want to do the right stuff as we integrate this. We want to make sure advertisers are happy. We want to make sure that Yahoo is happy. So we'll do it in a rapid way, but responsibly for the long term. So that's financially, this is amazing. And it's only the beginning. I spoke about other things that we can do. And I think there's a lot more we can do, and which goes back to the culture, fit, and trust between the companies. The second thing is that, which I love always, I'm asking myself, about competitive advantage. No one deserves to win. You should only win if you're better. And that's a consistent theme. So being first is irrelevant. Being most funded is irrelevant. But being the best is very hard to do. It takes a lot of execution and hard work and focus. And I think with this partnership, we become bigger, a better home for advertisers, who I think will look for alternative to social and search, just because of all the dynamics in the market. So I think we'll be a better version of ourselves on the other side of this, because bigger and better, and more competitive. So that's the second reason why investors, I hope, should be happy.
Awesome, great. And then, so while we're with you, you've mentioned in some of the narratives that you've described as part of this deal that Taboola will double Yahoo's native advertising revenues by approximately $1 billion to $2 billion. Can you elaborate on that statement?
Yeah, I think that, I feel strongly about that, spending time with the team between user experience optimization and A/B testing. We'll always do the right thing for consumers first. So we'll test what works for consumers, hundreds of millions of them, and for advertisers at the same time. And there's a lot of upside by innovating formats and user experience. Like if you think about how rapidly Instagram is changing, or Facebook is changing when it comes to what you see when you open the service, I think we can be better. So that's going to be a lot of collaboration between the companies to try things, maybe break things, but long term getting better. The second thing is, again, I'm convinced contextual will be a big thing, which kind of takes us back, I guess, to 20 years ago when the whole search was born, which You obviously led that space. But I mean, it's interesting. It's kind of like it's coming back in a bigger way, you know? And so I think our mutual scale combined, as it relates to, you know, Yahoo advertisers, Taboola advertisers, mutual advertisers, there's going to be more advertiser success in a safe and consistent way. And the third one is e-commerce, which I still think that we're at the early stages of what we can do to drive growth. So all these three things are big buckets. But funny enough, they're quite correlated to what Taboola wants to do independently, as you know. Right? That's our first board slide every board meeting. You know, what is the top three things, three things we're working on. So it's very correlated. And I think that has a huge growth opportunity for us.
Yeah, net positive for both of us. So Jim, we've spoken about the 30-year term and it being an unusual one. Obviously, over that length of period of time, how do you see Yahoo and Taboola keeping aligned and staying aligned?
Look, I mean, look, the easiest one obviously is that we are now the largest shareholder of the company. That makes us extremely aligned with the future here, and think that we really do bring something unique to the table, and that I do think you've talked about on your earnings call and other places about really now being truly a must-buy, and it really does establish, I think, Taboola as that. As far as like the long term, look, I'm 52. I'm not saying I will likely be the CEO here when I'm 82. However, you know, Yahoo is about to turn 30. You know, this company has, you know, partnerships. For those who don't know, we also own AOL, which is still a thriving business doing a lot of cash flow, and I'm sure there are partnerships there that are that old. For myself, you know, I've partnered with Google in certain ways at every stop for now 21 years. You know, we just announced our cloud deal with them last year. And for Yahoo itself, you know, we're going on year 15, I think, of a deep Microsoft partnership. So look, these things are completely doable as the internet ages. In some ways, it's interesting to think about that in 2026 we'll only be at 20% penetration of retail sales will be online. So we're still so early on so many things. But it's now, you know, we're now firmly established as probably the #1 media source and content source in the world 30 years in to the modern internet. So I think you're starting to see long-term deals like this be, you know, conceivable.
I don't see you slowing down.
We'll see.
I'm happy to work in the renewal in 30 years. I'm not sure that statement was.
I used to work for Barry Diller. He's still going. I mean, it's possible.
All right. So staying with you, Jim, let's talk a little bit about Yahoo. Speak to a little bit about the new Yahoo,
Yep.
The growth strategy that we've got, that we're planning on, and also how does the Taboola deal fit into that?
Yeah. Yeah, I mean, for those who, I mean, I think, again, for a brand like Yahoo that's been around a while, and everybody, you know, a lot of people here, I'm sure, use a lot of the different products, the right way to think about the company and the place that how we're going to win and be strong is from the point of view of the individual brands. So we are now truly a portfolio of brands. Yes, the Yahoo name sits on top of a lot of them, not all, like Engadget or TechCrunch, and there will be others, and I'm sure those won't be Yahoo branded as we go out and become more aggressive on the M&A front ourselves. But the way that you get a company like this going is brand by brand. So Yahoo Finance is #1 in its space. Yahoo Sports, #1 in fantasy, top 2 in sports. You know, email, #2 to Gmail, and still one of our largest businesses. News, we're #1, and each of them have their own unique audiences. You know, the notion of, you know, people go to one place and then kind of get spread out to the other properties is not really how Yahoo works anymore. People are very loyal to the individual brands. I think we've now brought in a world-class team of GMs and leaders of the company. My whole background is product and product management, and that is the only way to drive a consumer internet company forward is from the product point of view. I kind of always talk about, people used to try to put the Yahoo CEOs on the spot and ask them, are you a media company or are you a tech company? And the answer is neither. It's a product company. Some of those products have media. All of them are built with technology. But email is a product. Fantasy sports is a product, right? Stock charts are a product. This is not just content. We also do content. And so from every vertical that we're in, we're going to drive forward with world-class product management and creativity and, modern abilities to understand how to drive traffic. And so I always say, this is the worst our products are ever going to be. This is the least amount of traffic we're ever going to have. And the interesting thing, and why I think that Apollo was so smart to buy the company, and why I decided to drop what I was doing and come lead this company, is just, we are already a top 5 internet company. The other ones have all reached $1 trillion of value, and this company was bought for about $5 billion. There's amazing upside to everything that we're doing here, and I think our team is waking up every day to drive that value forward.
Yeah, definitely. So next topic, top of mind for many people, and I know both of you must have very strong opinions on the topic, so ChatGPT. Can you both speak to ChatGPT a little bit? So
you can't have a fireside discussion without, in 2023 Q1 without a proper ChatGPT moment in time. I can start one. I'll just say that since GPT was launched, we lost 2 hours a day of our COO who loves talking to machines. So we miss you. Come back to us, humans. But I'll say a few things. One, I think it's fascinating to see that in action. In many ways, it's a cultural exercise because my mom can now talk to an AI and actually see what it is like. She used AI all the time in her car and on TV and all those things, but now it has a face. We've all read maybe the New York Times article about it. But so I think there's a cultural exercise of making AI more available, accessible, understood by people. I think it will make people more productive in different jobs, maybe in all jobs. Something in what you do could be maybe improved with ChatGPT or GPT-type technology. I think for a company like us, I spoke about, we announced a partnership whereby advertisers can get suggested titles and creatives. We have this very successful internal creative studio, only meant for the top advertisers. We have 15,000 advertisers. The top of the market uses that creative studio, and it's very successful because they share best practices and things. So maybe now we can scale that. So I see upside. I'm not sure it will kill search, but I am curious what, so Jim, also known was quoted as the godfather of search because he went beyond back in the day the 10 blue links and then Ask Jeeves. There's a bunch of things you did there, but one of them was kind of GPT-like.
I told you I was old. I ran Ask
Jeeves. Kind of a GPT-like, kind of like, you can ask a question and actually get an answer versus just, links that you have to follow. And then you also changed the visuals and all those things. But so curious if you think it's going to kill search. You don't have to say that. But curious what you think about GPT.
I don't think it's going to kill search. I think that, and again, I ran Ask Jeeves as head of product and then CEO for about 7 years. That's how I wound up working for Barry Diller at ISC. We sold to them. And it was an amazing thing. We came in at a time when, search was already going to Google. It had already become Google. What we found is there are always other ways around the mountain. And when I look at ChatGPT, I think, yes, there's a percentage of searches that this applies to. It may be 5 to 10% if you think about existing searches, and then you may think it could add to search by creating new kinds of searches. But questions generally were about 10%. Wikipedia might be, type searches might be 3 to 5%. So you're starting there. I think the more interesting thing. Remember, AI has been around for a long time. It's in all kinds of products that you already use. This is just one application that kind of set people's brains on fire, which I think has been good for Silicon Valley. I think it's been, especially in the current market environment, it's been an interesting way to capture people's imagination. I look at it as something that can add value to all the verticals that we play in, finance and sports and news and others. It's not just a search application. And if you look at, I think I read that half of the Y Combinator companies are going after the space with large language models. So many interesting things are going to come out of here. Some are direct ChatGPT competitors, and some are doing totally different things with the technology. Again, I think Monica and I are going to be aggressive and think about how we bring some of those technologies into Yahoo. But no, I don't think it's going to turn everything upside down.
That was my question, right? I was curious
Yeah.
what you think.
Yeah.
Yeah, so we're on the same page.
Yeah.
Awesome. So last question. What is next for Taboola? What's next for Yahoo? And then also, what are your thoughts on what's next for the advertising industry?
Good.
I think, the biggest buckets or the biggest trends in the advertising industry, or at least as it relates to us that we're spending time on, one is privacy. We spoke about that. I think that will change consumer behavior. Twitter is about to charge consumers to get two-step authentication, right? Like the whole idea of privacy and security, I think, is going to get a whole new face. And that will affect publishers, companies like Taboola, advertisers. Everyone will get a new view of that new period we're embarking. The second thing is e-commerce. We just launched turnkey solution to help publishers, get even more content in e-commerce and financial services and things. So I think that will be big. And lastly, Jim talked about GPT kind of affecting everything. I agree. I think AI and GPT-like technologies will be. My hope is that culturally we'll accept it more than we used to. I still think it was a source of fear to many different types of organizations. If you try to convince many publishers to make their homepage personalized with AI, the initial reaction a lot of times is, stay away from my homepage. Is there a different future? So I think that AI and GPT, as it relates to consumers now liking it and interacting with it, might affect our industry more.
Yeah, look, for Yahoo, we're in a unique position. The market's been up and down, but having come back out on our own now as a private company with a very strong balance sheet, we're absolutely thinking about the medium and long term and building this company into the juggernaut it can be for the next 30 years. So my view is internal right now. It's on continuing to build out our team, continuing to build out our products, and again, we have a huge amount of upside ahead of us, and I do think that from a revenue and EBITDA perspective, and again as a shareholder, but just understanding how that can really help Taboola, we absolutely are focused on driving that upside.
Yeah, definitely very exciting times for us in our companies.
All right.
Yep.
Thank you.
I want to thank
Appreciate you having us.
Monica and Jim. Thank you for joining our
Thank you so much.
Investor Day.
Okay.
I'll invite our next presenter. I'll come in a sec. Our next session will be Eldad Maniv, our President and COO. Many investors, since we announced the partnership and over the last few days, kind of asked us to go one level down and just better understand what is it that we're working on, how is the integration going to play out, what should we expect, will we update investors every quarter kind of on our progress. So my hope is that you'll get a better view of that from Eldad. We put the best person on the job to make Yahoo successful, and that is Eldad and team. So Eldad, come on stage.
Good morning, everyone. I'm going to talk about the integration. Jim and Adam set interesting expectations for us. And what I want to talk about is how we do this integration, dive a bit deeper, hopefully not too deep. But I'll start with, Adam loves to speak about rockets and rocket ships. And my background is physics. I ran a large-scale aerospace project and use that analogy because it's an interesting one. When you build the rocket engine, the mix of liquid hydrogen and liquid oxygen really matters, and you need to balance that. And getting the most out of that engine is how you actually mix and balance that. And this is what we're talking about here. The mix between the supply and the demand is crucial for the success here. Yahoo is a huge publisher. It's a publisher. It's the 5th largest web presence in the US, and it's a publisher. We've integrated thousands of publishers. Yahoo also represents thousands of advertisers. We as Taboola implemented and onboarded thousands of publishers, thousands of advertisers. So really, Yahoo is doing both supply and demand at the same time. We actually have experience doing that as well. When we start a new market, like in a new country, the important part is to take the supply, take the demand, and gradually increase both, doing this in a balanced way. But unlike starting a new market, what we're talking about here is really not starting from zero. We're talking about thousands of clients, advertisers. We're talking about thousands of placements from a supply perspective. And what we really need to do is not migrate a publisher or an advertiser, is migrate a full ecosystem. We need to do this swiftly, but very carefully, because we don't want to lose the value, and we want to do this in a balanced approach. So the integration really has some broad impacts, and what I want to talk is about the collection of projects. This is really a collection of projects that include tech, advertisers, supply, and people. And each one of those, really, each focus area here, has many smaller projects that are each mission critical to the success of this. To enable a tech solution here, a tech connection, we need to look at the Yahoo side and see what features are there and create the feature parity so our advertisers can actually get the value that they're getting. We need format parity. They're using different types of formats. Today, they're targeting using certain data. We need the data access to do that. We need to provide the right level of reporting. We need all of that so these advertisers can continue to run their campaigns and continue to do those successfully. We need them to migrate to a new platform. We need the policy. Every advertiser and every publisher have a certain policy. We need that to be aligned. And the bottom line, these advertisers need to hit their performance goals. So that's really critical. And each one of those, as I said, is a project. On the supply side, I mentioned Yahoo is one big publisher, but it's thousands of different placements, thousands of them. To do that migration, we need to optimize, we need to implement the right UI, and we need to provide the right reporting and insights, because without that, you can't really optimize anything. And to do this, really what we're saying is we're going to double the size of our business, as you heard earlier, and we're going to gain significant efficiencies. But to do that, we'll need to staff the right people. We need the sales and account managers to manage this business. We need the support staff, and I'll talk about that later. We also need the operational support to do that. So really, to understand how all of this will work better, I want to take you into how we approach this integration. So let's start with the following. If we look at Yahoo Native, this is Yahoo Native. Yahoo is a very impressive platform. It's a business that's been in operation for 10 years and more. Thousands of advertisers buy from Yahoo, thousands of them. Some of them buy omni-channel, advertising types. So they buy search, display, native. Some of them buy native only. And the way they buy, the ones that buy omni-channel, that buy multiple channels, buy through the Yahoo DSP, and through that buy forward. The ones that buy native only, some of them buy through a DSP, and some buy directly through an API. All of those then flow into a recommendation engine today, accessing data, unique data that Yahoo has, through a serving platform and onto the Yahoo supply, that I mentioned, which again is thousands of placements that need to be there. So really what we need to do here is look at all of this, see the big value that's running through this. At the same time, what we want to look at, this is Taboola. So Taboola today has thousands of advertisers. Those advertisers buy through the Taboola ad console. We use our proprietary data. A recommendation engine that Adam mentioned is the algorithm. And this is all used to serve into the open web supply, which is thousands of publishers. When we look at that now, it's no surprise to see that there's overlap. There are advertisers that today buy native from Yahoo and appear on the Yahoo sites, but they also at the same time buy from Taboola and appear on the open web on other publisher sites. Some of these buy through the DSP, as I mentioned. Some of those buy through native. So if we look at the ones that buy omni-channel, what we want them to do is to buy through the Yahoo DSP, on the Yahoo side and also get here. The ones that buy native need to go, again, to both sides. So let's look a bit into more detail on that, what that implies. So our integration, and this is the first concept of integration from a more technical perspective, is designed to methodically route balanced allocations of supply and demand simultaneously. So we want to start with a small portion of traffic to flow through Taboola and increase that over time. What does that mean? Let's follow some of the paths here. So let's take an omni-channel advertiser today that buys from Yahoo. What we'll want to do is they buy through the DSP. We will want to take a small portion of traffic, route it through here, bring it to Taboola, to the recommendation engine of Taboola, but also allow the data access that that advertiser has today, and through that, throw it back to the serving and serve it on the Yahoo supply. Similarly, for a native-only advertiser, which buys either through the DSP or through the API, again, flow it through this, take a portion of that traffic, flow it here, and then back into the Yahoo supply. Now, what that allows us is this lever here. What we want to do really is to be able to turn that lever. So start with no traffic and then grow the amount of traffic that flows through here all the way until all traffic flows through here. So that's really the concept of integration. To enable this and to implement this, there are a few things that need to happen. So on the advertiser side, first of all, they need the right features. They're using features today. They need those same features. They need targeting parity. They're trying to target very specific users through specific data sets. They need to be able to do that. From a supply perspective, we need to enforce the right policy for the advertising. Again, we need feature parity here, the specific placements. We need to implement the right UI on the Yahoo placements. And of course, we need reporting to be able to do that. All of that leads to a lot of technology projects that need to happen. The obvious ones, which I mentioned, is data-to-data, server-to-server connection, data access from the Yahoo side to Taboola, targeting and feature parity, so developing all of these targeting concepts, all of those features that are there. We need content moderation because the policies are similar on native between Yahoo and Taboola, but slightly different. So we need to implement that into our artificial intelligence and consoles. Algorithms, Yahoo has their own algorithm today. We have a different algorithm. We need to make sure we optimize such that, again, we provide the clients the right recommendations. And nothing works without building a solid A/B testing infrastructure, because on the web, you always think you know what happens, but you always need to A/B test this. So once we built all of this initial connection, really what we're heading to is the end state. What does this end state look like? And if we look here, there's the Yahoo omni-channel advertisers. They will continue forever to work through the Yahoo DSP. So they buy multi-channel. One of those channels is native. That native channel needs to flow into the Taboola platform with the right data access, as I mentioned, to the recommendation engine, and then serve both on Yahoo supply, but also on the open web supply, as Jim and Adam mentioned earlier. The native-only advertisers that were here now are migrated. So all of these native-only advertisers are now Taboola advertisers and work through the Taboola flow, and again, be able to access Yahoo supply and to be able to access the open web supply. So that is the end state. Beyond that, there is also the Yahoo DSP being connected to Taboola and driving video and display into the network. And one of the most important things is this persistent data connection that allows the targeting that I mentioned earlier. So for that end state, there are again projects that need to happen. On the advertiser side, we need to migrate customers. All those native-only advertisers need to move from Yahoo into Taboola. They need to be onboarded by Taboola. That's quite a bit of effort to do that. As they do so, they need their campaign history. They need the right level of reporting. So all of that happens. And they need to be able to access the open web supply that I showed and not just Yahoo. We also need to continuously support, since we are the native channel for Yahoo, we need to support the omni-channel sales of Yahoo with the right service to their sales and account management team, and obviously support. On the supply side, Taboola's technology is with code on site. So the last aspect here requires client-side integration, which is what the technical aspect that needs to happen, which drives all of the value of the data that we mentioned. So with this, really what we've talked about is what needs to get done. That is at a high level what needs to get done. But let's now address of who will do it. So as I said, we're about to double our business, and that gains significant efficiencies that are gained. But it also requires that we will grow our team. What do we need to grow? On the sales and account management, we need to be able to service all these clients that are migrating and to serve the Yahoo omni-channel side. So that is staffing that needs to happen. It needs to happen mostly ahead of those clients flowing in. We need to operate this. So we need to build these customers, invoice them, we need to collect, we need to operate that. Customer support, we need to support all of these clients. We obviously also need to support Yahoo as well. From a technology perspective, I mentioned feature parity, I mentioned targeting parity, I mentioned multiple other aspects of data access, server-to-server connection. Someone needs to develop all of this, so this is staffing up our engineering team that needs to do that. And of course, the algorithm part, again, to match everything that is available on Yahoo over the last decade, there's work to be done here. From a supply perspective, 5,000 plus placements. Someone needs to actually create those placements on the Taboola side, so that is our professional services team that needs to implement that. Content moderation, we have beyond artificial intelligence, we also have users, people that are reviewing content. They will now need to do the same for the Yahoo demand to serve on the Yahoo supply. And there's technical support for UI. So this is really the who. And with that, I'll go into the when everything happens. So we looked at this project integration effort, and we devised 4 unique stages here. Phase 0, right here, is the planning stage. We're nearing the end of that stage. This is everything that I mentioned from a technology perspective, from a sales planning, how do we onboard clients, what do we move where. This is the entire planning session of what happens throughout this integration project. Once we're done with that, we get started with the build and test. All the functionality that needs to be built, all the integrations happen at this stage. And what we start doing is start testing the pipes, putting some water into the pipes, not material revenue, but trying to see that things actually connect. The data connects, the advertisers can actually flow through this. So this all happens here. Once that happens, this is really the point when we start to turn the dial. This is phase 2. And once in phase 2, we start turning the dial of starting to send traffic, as I said, from both sides, supply and demand simultaneously, and start increasing by pulling that lever further and further, turning that dial. We expect this to start in the second half of 2023, as we mentioned. Once we're done with that and we got to the 100%, we're at the stage where we're migrating the advertisers to the Taboola network, the ones that are not omni-channel but native only. We're doing the client-side integration, so code on-site on the Yahoo pages, and then the optimizations that need to happen here. Basic optimizations, which Adam mentioned, UI optimizations, e-commerce, header bidding, etc., all happen from this point and beyond. We assume that this phase ends, phase 2 ends, and phase 3 starts by mid-2024, when all of the traffic has been transitioned. So really, to summarize this, we heard from Adam and Jim that the success of this partnership is really a top priority for both companies. I can say that I'm personally chairing the steering committee for this integration effort. We've put the most talented people from both sides as leaders of the tech tracks, of the sales track, of the people track on this, and we're making progress. The teams are really working shoulder to shoulder. It's a project with a lot of components. Each of those we've done before, but this is a big set of these projects that we do. So we know exactly what we need to do. There is a lot of work ahead of us, but we're going to get there, and we're very confident with doing so. With that, I'll ask Steve to come on board.
Thank you, Eldad. So for those of you who don't know me, I'm Steve Walker. I'm the CFO. You may not recognize me because Adam convinced me that I didn't have to wear a sport coat today, even at an event like this. So that's why I'm in a casual shirt. But my job here today is to take kind of what you've heard today and summarize a bit, and also translate it into expectations for when does the revenue start and how do you think about it. So let me do that. So Eldad talked to you about these 4 phases. And what I want to do is now translate these 4 phases into when do costs start, when do revenue start, just so you get a sense. So first, in phase 0, that's where we are today. We're getting towards the end of phase 0. We'll soon move out of this. But for now, there's obviously no revenue. Nothing has been transitioned. There's nothing that's started. And really, there's minimal costs. We're using our existing resources. We haven't hired people to really start this yet, so very little cost. Soon we'll move into phase 1. With phase 1 now, as Eldad described, we're starting to build the connectivity between the platforms so that we can start to transition advertisers. So we still won't have revenue. Technically, we'll probably have some very small test revenue in there somewhere, but it's very small, so you can consider it no revenue in this phase. And we'll start ramping up the cost. So we'll start hiring, and we've already put offers out now for mostly R&D staff, which will be the people who are going to start building that functionality that Eldad just talked about that helps us then migrate the advertisers in a staged way. In phase 2, then we'll start ramping the revenue. So this is when the pipes are built, everything we believe is working, and we're going to start transitioning the revenue over. As Eldad said, we need to do it in a balanced way. You don't want too much. Did you use the liquid oxygen and liquid hydrogen reference? I didn't listen. But you don't want too much of either. You need to be balanced. You need to bring them both over in balance. And so that's when the revenue will start ramping. And the cost will continue hiring. And in this stage, we'll start hiring more of the sales and account management people that are necessary to help manage the advertiser relationships that we're bringing over. So costs continue to ramp, a lot more on the sales side of things, sales and account management. Then in the phase 3, we've now reached the full peak state in terms of full run rate for the deal. And from there, the revenue will continue to grow, we believe, as we continue to optimize and take advantage of some of the growth opportunities and everything that Adam talked about earlier. And our cost will, at that point, hit a steady state. So, and then from there, the cost will, first of all, the engineers that were on the project will probably be able to move off. We'll be able to reallocate them to other things. And the account management, sales, professional services, the other things that support the revenue will grow at a slower pace than the revenue, we believe. So we believe we'll gain scale advantages at that point. So if you're visual instead of table-oriented, this is one possible depiction of how the revenue could look. Obviously, it's not to scale, and we're kind of guesstimating here, but very little, 0 revenue in phase 0 and 1. In phase 2, we'll see a ramp, and then in phase 3, we expect the revenue to kind of continue to grow at a steady rate. The hardest part for us to predict today is what does the shape of that curve in phase 2 look like? Here I've depicted it as kind of a hockey stick where it starts slow and it grows fast at the end, but it could be more of a straight line. You know, we could find that we just need to be balanced and do it at a steady state, so it could look more like a straight line. Or we could find that things are working really well and we turn up the spigot really fast at the beginning, so it could ramp very, very quickly at the beginning. That's the probably biggest unknown for us today, and that's what will determine how much revenue we get in 2023 and early 2024. So that's the part we'll learn as we get into this. On the cost side, Eldad mentioned the different buckets of costs that we have, and I just wanted to give you a sense of where we're really spending money to support the deal. So we'll have a publisher account management team that's very small. We'll obviously need some G&A resources like billing people, collections people to support the revenue. That's very small. The more significant costs are on the right-hand side there. So our advertising, sales, and account management people, that is a significant cost. We need people to support the advertisers to make sure they have a good experience, that they're getting what they need, that they get the performance that they need, as Eldad talked about. So that's a significant cost, and that'll be basically permanent, that we'll always have people supporting our advertiser revenue. Customer support is another relatively significant cost. It'll be a big team that will support both the advertising side and the publisher side, supporting the placements, making sure everything's working properly. Their first level, second level, third level technical support when things go wrong. So that's a permanent cost as well. Both of those, like I said, will kind of ramp to a certain level, and then we expect it to grow slower than the revenue from there. And then finally, there's the technical team, which, as I mentioned, it's a significant cost now, but it'll probably be a significant cost 5 to 6 quarters, and then we think we can transition those people off because this will become part of our core. There's nothing about the Yahoo supply in the long term that's that different that we can't support it with the same core functionality as the rest of our business. So again, visually, what that looks like is something like this. We're exiting phase 0 now. We'll start ramping that cost, kind of hiring people, especially the technical staff early on. It'll continue to ramp into phase 3. At that point, we'll be able to move some of the technical people at some point back to other projects, so that cost will come off, and then it'll grow at a pace probably slower than the revenue. Obviously, the area under the cost here is the $30 million that is in 2023 is the $30 million of investment that we're putting into the project this year to make sure we build what we need to and that everything works. So that's the $30 million of investment, but obviously the ROI on this is significant. So as we said when we announced the deal, we still expect $1 billion of revenue, $150 million of EBITDA, and $80 million of cash flow on an annualized basis when we hit kind of the full ramp. Obviously, we believe we can grow it from there, and Adam has talked about doubling the native revenue from Yahoo, so we believe it'll grow, but that's our steady state when we get everything transitioned over. So obviously, that's financially transformative for us, and we're excited about that. But I also want to talk about the strategic value of the deal, because there are aspects of the deal that go beyond just the financials that we're excited about. So, and I want to go back to, for those of you who've been with us this long, I want to go back to our Investor Day in March. At that time, we talked about the fact that we have 40% ex-TAC margins at Taboola. That's roughly double what you'll find in our space for most other companies. How do we do that? There's got to be a reason that you're able to do that. We're in a competitive market space. It's not like you can command excess margins for no reason. You have to have some sort of significant competitive advantage. What we explained at the time is we believe that there are 5 factors that drive our competitive advantage. I'm not going to read them all to you now, but I do want to walk through each of those and tell you how Yahoo actually enhances that competitive advantage and why we're so excited about the value of this deal to driving our competitiveness in the open web. So the first one that we talked about at the time was our scale, and Adam actually talked about this earlier, is our scale advantage. And scale in our space basically drives a network effect. The more scale you have, the higher your yields go, the easier it is to win publishers and win publishers more profitably. Yahoo is a quantum leap forward in terms of our scale, 60 to 70% more scale than we've had. That's a huge advantage for us because it'll make us even more competitive in the open web. We also talked at the Investor Day about the second advantage that we have is that we drive more yield than our competition. Part of that is that scale advantage that we talked about. And there's really 3 things that drive yield in our space. You have to have a high number of advertisers, you have to have the best data, and you've got to have great technology. Yahoo significantly enhances 2 of those 3. So we'll have significantly more data because we'll have a lot more data from Yahoo and all of their users. We also will have significantly more advertisers because we're bringing advertisers over with this deal, And the combination of more advertisers and more data should help us drive up yield across our network, not just for Yahoo. We'll also do it for Yahoo, by the way, but across our whole network, this will be beneficial. The fourth thing we talked about in terms of what drives our competitive advantage is that we're not dependent on third-party cookies. And for a lot of people in the ad tech space, that's not true. So we're heavily contextually oriented. What Yahoo does for us in this regard is gives us significantly more contextual data and much deeper data on a lot of users. So Yahoo reaches 84% of the US internet population every month. And they've got highly engaged users. So these users, I'm a Yahoo user. I go to Yahoo Finance daily. I have, actually my homepage is Yahoo, so Jim left. Darn it. I could have. Oh, hey, still use you as a homepage. And you know, I'm in Yahoo Sports. I use Rivals. Like I'm a huge Yahoo user. They see me 20 times a day. And that's typical of the Yahoo user base. That level of contextual data really gives us a huge advantage as third-party cookies are deprecated, and it really becomes a contextual world. So this advantage gets even more significant with Yahoo. The fourth thing we talked about at our Investor Day in terms of our advantage was our platform advantage. So we provide a lot of services to publishers that our competitors don't even think of providing. So, for instance, Newsroom is a product for the editorial staffs that helps them figure out what to write, what their readers are reading about elsewhere on the web. Homepage for You, Adam talked about earlier, that's a personalization technology for publishers to personalize their homepage with AI. Subscription driving, so we have tools that help publishers drive subscriptions on their sites. Taboola News is a product that basically it's Apple News but for Android devices, and we drive traffic to publisher sites. What the common thread is on all four of those platform services that we provide is it takes data. It takes unique data to provide those services. And what Yahoo does for us in this regard is, again, because of the depth of data that we'll have on users, every one of those services will become that much more valuable. So Newsroom will be an even better tool. Homepage for You will get better. So our platform advantage gets even more significant with this deal. And then fifth, and certainly not last, we talked at the time about how we've gone into e-commerce. We made a big bet that this is part of the future of monetizing the open web. And interestingly, Yahoo is Connexity's biggest customer. So we believe there's a ton of opportunities for us to work together to really drive our e-commerce advantage that we have and make it even more significant. So bottom line, all five of the competitive advantages that we talked about back in March get enhanced by this partnership. So we're excited about the financial part of the deal and the financials that come with it. We're even more excited in some ways about these strategic advantages and how strong we get with this deal. So with that, let me invite Adam and Eldad back up, and Rick's going to help us moderate. We're going to have a little bit of a Q&A session here. Thank you.
So you just raise your hand. Jason. Thank you. Jason Helfstein with Oppenheimer. How are you guys? Thanks for doing this. So I'll just ask one. Can you bridge the $1 billion? So what was that at, those, if you think about what were those impressions garnering at Yahoo, previously, and like how do you bridge that?
So we haven't spoken specifically about Yahoo financials, but what we have said is that that $1 billion includes an assumed uplift on our part of driving higher revenue for Yahoo. We haven't disclosed exactly how much, but it does assume some uplift, and it assumes some uplift across our network from the kind of yield advantage that we think we'll have with this. So it's their revenue with an uplift plus some uplift on our network. It doesn't include the growth initiatives that Adam talked about, like header bidding or some of the e-commerce things we think we can do together. So it's really their supply with an uplift and then some yield uplift on our network.
Can you broadly quantify it? Is it 20%,
most of it's their revenue with an uplift. That's most of it. The smaller part is the.
Can you say how much the uplift is?
So I don't think we've disclosed that. I guess let's just say we're confident that we can get a significant uplift. We've assumed something conservative for this.
Laura?
So Eldad, thank you for coming. Super helpful to have your what can go wrong, how bad can it be? You've done thousands of these. When it goes badly, what happens and how long does it take and how much extra does it cost?
So I think we built buffers into the plan. Each of the projects is very, very doable. The complexity is that it's a lot of projects all happening at the same time. So I think really the right project management would mean small delays if something goes wrong, but nothing here breaks. So there's nothing that breaks. I can say that this week we have about 40 people, tech teams of both sides, doing an offsite together and have really made progress. So the more we dive into this, the more clarity we're getting into exactly what needs to be done. And we think it's very doable.
Okay, and then for Adam, just to follow up, we cut costs. You cut costs last year, and now we're going to add a bunch of people for this. Normally, you do add supply, not of Yahoo size, but normally you're adding, 12 to 50 publishers a year. So I guess my question is, you already had staff that was able to do, presumably you're not, please confirm for me that you're not going to go out and try to hire more and kill him by adding more publishers that were done here for like 12 months. But I'm just wondering why that we already had an infrastructure to onboard 12 to 50 publishers. This is just a super big one. I guess I just want to understand, understand the 30 million a little better.
Yeah, I can start and Stephen Ludd can chime in. So first of all, in this case, the 30 million is a combination of people, infrastructure. It's not just a team. So there's also an infrastructure investment that we need to go into play. But if you think about it, it's not just a publisher. So you have thousands of advertisers that will require account management. We have professional services for thousands of new placements that we want to optimize and create. So you have thousands of clients. You want to sell more into this. So just sales and account management is a bigger portion of the investment on the people side. And then you have the infrastructure that we want to make sure we're prepared for. So this is it's not a publisher deal. In the sense that it's many, many, many publishers, hundreds of publishers really, and then thousands of advertisers in one. It's a whole ecosystem, like Eldad said. We need to move into Taboola, and the upside is so big. You wanna make sure you do it correctly. And by the way, in tandem, we want to get as many publishers as we want. So to be clear, if you're a publisher listening to this, we want to work with you. Whoever you may be, we call it liberation. So whoever you may be working with right now, it's okay. But we do think there is a bigger upside with us. And last year, 2022, which was macroeconomics challenging year, it was our second best year winning publishers. And I hope this year will be better. We don't guide for better because that was a great year. But to be clear, if we want to do this for the longest time, winning publishers' trust for 3, 5, 10 years is still very, very important to us and forever will be. So we don't intend to stop selling to publishers either.
Yeah, let me just add one thing to that. So in a typical year, our new publisher growth would be on the order of 10% of our base. So if we're at $1.4 billion of revenue, we would normally say new publishers might bring in a good advertising market, another $140 million of gross revenue, 10%. This is $1 billion. You can't support that without bringing over the advertisers. Like normally we bring on a new publisher and yes, we have enough advertising excess demand that you bring it on and it kind of fills that supply pretty easily. But that's because usually we're bringing on 10% in a given year. This is so huge that we have to bring over the advertisers with it, or else we would our advertisers won't scale up enough to fill it. We won't get the uplift that we need to get for Yahoo and for ourselves. So that's the other thing that's unique about this is it's 70% increase in revenue and volume, not 10%. And by the way, the 10% usually happens over 12 months. This will happen over 6 months. So it's even significantly more.
Andrew Boone, JMP.
Thanks for putting this thing on. Adam, I wanted to ask about the doubling of native ad revenue, right? That clearly is a goal, but what has to happen for that to come to fruition and for you guys to execute on that opportunity for you to double that billion?
So, I mean, the most obvious thing that will happen, I hope, on a daily basis throughout the relationship is A/B testing different user experiences on Yahoo together with the Yahoo team. So they have a great, very, very strong team running the consumer business, and with I think a lot of aspiration to kind of innovate different formats and different experiences. In many ways, Yahoo hasn't changed in a long time. So I think on that one, my hope is that this is a daily improvement, and over time, something we can even budget for and rely on as it relates to user experiences, new placements, and things that will drive user experience growth, but advertiser success and RPM yield growth. If you think about a full page revenue per 1,000 impressions, I think that can grow significantly over time. So that's one thing that I hope will become just the way we do business. Then you have bigger things. Header bidding, which, like I mentioned, we're seeing very encouraging early signs on smaller publishers, where we generate millions of dollars a year per publisher. If this would scale to Yahoo, that would be big. It wouldn't be as big as Yahoo, but it would be potentially, big. And then the third one is e-commerce. There's already an existing business. So there's already working relationship between the teams before even Taboola acquired Connexity. So that now with the deeper relationship and equity partnership can grow more. So I would say those three things are, I think could be material. And the last one is the contextual segments, which we'll see how the market reacts to those. My guess is that with the bigger scale we have, we can create new contextual segments, make it available for advertisers on Yahoo and the network. And my hope is that we'll see that it creates better return on spend. So those are the big buckets. Some of them are daily. Some of them will be investments that we'll need to see if they mature.
And then, Steve, I wanted to get further clarity, and this is really a follow-up to Laura's question, but it sounds like you guys will have excess capacity as you guys roll through the phases and kind of complete the integration, right? Just help me understand that. Is that you guys are literally planning a RIF, like in 2 years?
On the tech side you're talking about?
Yeah, exactly.
Yeah.
Or
So,
what are you guys going to do with the excess engineering capacity?
No, so we have plenty of projects that we have need for people on, and I think if anything, we're shifting resources away from some of those to help with Yahoo, in addition to the people we'll hire. So no plans to actually cut, but the actual project cost for Yahoo will shift to other things, the people who are on that project. So no RIF, just shifting people to other priorities.
James Koppelman with Cowen, or is it now TD Cowen?
Yeah, congratulations.
Thank you. So Adam, you said that your value-added tools like Newsroom, Homepage for You, and Taboola News are still in the startup phase, still in early innings in terms of reaching their full potential. Could you speak broadly about how the incremental data and relationships from the Yahoo integration can help jumpstart these tools, maybe move them closer to maturity over time? How are you thinking about this strategically? And then I have a follow-up for Steve.
Yeah. So, each one of them kind of, there's contribution to different things. So as an example, on the Homepage for You is driven by AI and data mainly. So that is a reminder that helps publishers kind of create this personalized experience on the homepage and to increase the pages per session, so it makes the pie bigger. We have publishers, McClatchy was in our last year Investor Day, if you recall, and they spoke about McClatchy, variety of publishers, having Homepage for You, which is an AI service that now McClatchy is bigger. So with more data, this supercharge Homepage for You and the editorial technology. So we have about 2,000 writers and editors using Newsroom, which helps them know that people who read about this on their site, when they leave their site, what else do they do? So now with the Yahoo partnership, we'll see the average American so many more times during the day. It will make us smarter and better to create this correlation between people who do this also do that. People who came to my site, what do they do when they leave me? And we're seeing more and more editorial teams rely on Taboola to make decisions. What content they should write? What content drives subscription? And all those decisions will be just stronger with Newsroom. So those are at least two obvious ones. And I will say that the number one priority for Taboola is performance advertising. Because again, I think that this has the biggest upside for investors. We can double and triple the yield over time by making more advertisers and existing advertisers succeed with Taboola even more. So with the Yahoo partnership and the contextual data we'll get and the quality of supply, I hope that advertisers will see even more success with us. I'm curious if Eldad and Steve, anything to add?
I think.
I would just add that Steve said that we're treating this very lightly, but if you take the advertiser base today of Yahoo that spend only on Yahoo, the advertiser base on Taboola that spend only on Taboola, each of those could now spend on all platforms. When Steve talked about incremental yield, really that is opening up the ability for those advertisers to access supply in a much greater way. So that's another way that over time we believe will increase significantly.
And then a quick follow-up for Steve. Can you help us size the potential revenue benefit to these tools that Taboola could see coming out of the other side of this integration? I understand it's still a year and a half away, but for example, is there a concrete incremental revenue contribution you expect to see at Taboola News, which I think is already generating more than $50 million annually? And finally, maybe just on top of that, is how big do you expect Taboola News to be from a revenue perspective in, say, 12 to 18 months?
Yeah, so we haven't started guiding for Taboola News specifically. I think what we've said is that we still believe it's a $100 million plus business. We've said that it was a $50 million plus business in 2022. So and we're still seeing triple-digit growth rates there. So that kind of gives you some parameters to think about it. But I think it's a big business. I think what Yahoo does for Taboola News specifically is it gives it part of the challenge of Taboola News is someone picks up their cell phone, they swipe right, what do you show them? Well, we're going to be a lot better at knowing what to show them. That creates engagement with the user. Engagement with the user, one, it'll drive more revenue for us, but also it makes the Samsungs of the world look at that and go, wow, you do a really good job with this, and it'll help us bring in OEM relationships and expand those relationships and do more with them. So, the hard part is the biggest way that Taboola News grows is expand those OEM relationships, and this will help make the experience for the user better, which should help with that, but I don't know how fast that happens necessarily.
Stephen Chu, Credit Suisse.
Thank you. Thank you for hosting these guys, and Eldad, nice to see you in person. So touching on what you were talking about earlier, I was wondering if you had a chance to do an audit to see how much of the overlap there may be between Yahoo advertisers and Taboola advertisers, so we can start thinking about the potential benefit longer term to Taboola as it stands now. And for Steve, in terms of the guidance parameters there, why is there such a large disconnect between EBITDA and free cash flow? Thanks.
So I'll start. We don't have exact numbers of the overlap. We're actually going through that and analyzing that. It's a pretty tedious effort because even understanding what the same company is, which in different platforms has slightly different names. So we're going through this. What we're really doing is going through a mix of what companies are spending on both platforms, but also what type of feature set they're using. So we can actually look at the integration phase and see the companies using these feature sets, which are compatible today, can move earlier, whereas some that require more feature parity, it would move later. But there is significant, from a revenue perspective, there is significant overlap.
So in terms of the free cash flow EBITDA gap, so there are some things that will drive that gap. So we will have CapEx to support this much revenue. We have to bring in, we have to buy servers and support that. There's taxes, which frankly, a lot of this is U.S. based, so we may have higher U.S. taxes. And then there's some conservatism built in there too, to be honest with you, that we just need to see how it plays out before we'll know what the exact conversion ratio is on the cash. Most companies don't guide the cash flow because it's very hard to predict, and so I was trying to be conservative on that as well. Was there another part of the financial question, or did I cover it? Okay.
Thanks for taking the questions. Is there any way to size the Yahoo relationship with Connexity currently? And how does that inform just your view on the uplift in yields?
So I don't think we don't usually want to get into specific revenue relationships with publishers. So like we usually don't talk about the exact size of a publisher or anything. So I don't think we necessarily want to get into that. I think what we could talk about though is the opportunity between Connexity and Yahoo, which they're already working on various ideas of how we use Connexity's demand and its unique e-commerce demand to drive more revenue for Yahoo. I don't know if you do want to talk at all about some of the growth opportunities there.
So I don't know if it answers any financials though, but if you want to imagine what can we work together on, so there's Yahoo itself has a big search, for product business as well as e-commerce business on the content front. So those can go greater. It can be people can shop more on Yahoo, and there can be more content on Yahoo that drives conversion to retailers. So these are kind of things that we're already seeing on the rest of the Taboola right now, of how publishers basically participate in e-commerce. I think that it can be bigger because still we're early kind of innings in the e-commerce in general in the open web. So that if you look at just the announcement of Turnkey and Time, right, just automation of using data to create content at a larger scale in different verticals, financial services and commerce and healthcare and travel over time, different verticals. I think there's a lot there that can increase the portion of traffic that has high intent that retailers want to be part of. So it's hard to put a number on that, but it's a huge industry, and Yahoo is big, and Connexity is sizable. So I do think that it has a big opportunity, in terms of scale. But we haven't kind of given specific numbers. It's too early to say, too,
Fair enough. Thank you.
Thank you for the question. Just to go down into the cost side a little bit more, is there any way that you can gauge or just indicate kind of what the general amount of additional investment will be required in 2024? Or is that a little hard to gauge given that some of these costs are going to be longer term?
Yeah, so what we can say is at some point in phase 3, as we're ramping the revenue, the whole deal will become EBITDA positive and the revenue will significantly outweigh the cost. So the way we think about it is the $30 million is investment in 2023 because it's going to lead to revenue later. So we're investing now to get to that revenue. In 2024, it's an EBITDA positive deal, most likely, certainly for the full year, and probably sometime very early in that. So I wouldn't think in terms of incremental costs there. I would think in terms of $150 million roughly of EBITDA potential when we get fully ramped, and the fact that it probably will be EBITDA positive fairly early in the year at the latest. You confused him now.
Yeah, the question about the ad yield. What do you see? What have you seen historically when you've done acquisitions? Have you seen, as you have more data, the ad yields go up? You talked about how it can double or potentially more than that. Is that like a theoretical, is that a theoretical target, or is that something realistic? Have you seen that in early testing at this point?
Yeah, we speak about, so Steve and Dario can probably talk about that. So we did share some historic data about yield growth over time by investing in data and AI, so how scale contributes to yield getting better. So Steve, if you want to get into that.
Yeah, what we've talked about historically is that yield has historically driven 10 to 15% growth for us per year. And it's hard to, again, the elements that drive yield are advertisers, data, and technology. Data is probably the biggest one that we get as we grow, bring on more publishers and grow overall. You get more and more data. You get to see the users more often. You get to see what they're clicking on. You get to understand that somebody who's in New York on a Friday morning in Manhattan on a laptop reading CNBC, an article about green energy, tends to click on car ads for whatever reason. Like you get to get that data, and then you can use it across the network. So somebody who's in Manhattan on a laptop in New York in the morning on a Friday reading about green energy on USA Today, well, let's try car ads because that's what we've seen elsewhere on the network. Even if it's not the same user, not even the same site, it's a similar context. So you get that context and it drives yield because you've got that data. So that's what the growth in our scale does for us, is it gets more data. But it's hard to separate out how much of our growth in yield, the 10 to 15% per year that we get historically, is from data versus investment in the algorithms and the technology versus bringing on more advertisers, because that base is growing too. Advertisers, by the way, also follow the supply. So bringing on more supply means you can get more advertisers. Adam talked about if you get to the must-buy level, then the advertisers they start with you. They say, oh, I have to buy Taboola and Google and Facebook. And then they figure out what else they're going to buy after that. So they do follow the supply. So it's hard to separate the three elements, but we've definitely seen this in our past.
I think just worth mentioning that publishers that, on the UX optimization front, publishers that go from widgets to feed, from with video, in-feed video to without in-feed video, from no carousel formats like you see on Instagram to with carousel, all those things drive yield growth. So, and that can be significant, tens of percents, sometimes more. So between technology and data and advertiser base and UX, all of these things play out quite significantly. And there is historic data to show how it every year keeps happening.
Hi, good afternoon. I thought today was really useful and helpful. As an investor, I think Friday's call with the fact that there was no revenue for Yahoo was a little bit misunderstood. And I think today was super helpful. I had 3 questions on that, if that's okay. First, just to confirm, it does feel like that's just a placeholder, that it's 0 revenue, but you do expect some revenue based on the charts that you had there. And the question for Eldad is really, during your presentation, you talked about that turn of your hand, how quickly you're going to turn on or turn off that spigot. And Steve has those graphs or those curves of when that curve could happen. What's your expectation of that curve? And if you do believe that you're going to get to a EBITDA positive number early in 23, that means you're going to do 30, 40, 50 million of revenue even before that, which means that you're probably at the worst case doing that this year. And maybe I'm being a little bit too dramatic, but it would seem to me like in your best interest to turn it on as soon as possible with the understanding that you're not ruining the long-term opportunity. So I just wanted to hear your thought about that chart that Steve had and Steve's question about the placeholder of the revenue.
So I'll start with, we're building the technology to actually allow us to turn that knob. What's driving turning this is all the other projects. So I mentioned earlier, for example, if we look at advertisers that use specific features, if they're using a feature that today is not supported, until that feature gets built, that targeting gets built, we can't really use that traffic. So we need to now map which advertisers are using which features, what targeting capabilities, and do that matrix to see what can be used into that lever at what time. We are in the final stages of that planning. We don't have that detail. And so we're being very careful in how we estimate what it would take. So I don't know to be more optimistic than what we said. We're going to obviously do this as quickly as possible, but while making sure that there is no risk in doing so.
So on the revenue question, if you ask me, take a bet. Are you going to get revenue this year from Yahoo or are you not? I would say yes. I would bet on our teams. Our teams, the only thing that could delay revenue fully into 2024 is if the project doesn't go well. Like with the pipes that we connect the 2 systems, the dial that Eldad talked about is just not working in some way. That's what would delay the revenue. So if I had to bet, yes, I'd bet we would get revenue. And frankly, it's because I'd be betting on our teams. For me as CFO, though, I just don't have clear line of sight to it, so that's why we chose not to guide to it at this time. We do expect to update as we go through the year, and we have more visibility into how things are working.
Would you guys be willing to speak to the nature of any performance guarantees that you've made to Yahoo in connection with the transaction, and whether or not the layoffs that Yahoo announced on the ad sales side present risk that to the execution of your plan?
know what I mean? So we haven't disclosed any. We would never disclose any one publisher, specific deal terms. It doesn't make sense for them or us to do so. I don't think as investors you would want us to do that. But so from that perspective, what we did share though is it's a great partnership. It's very accretive. So what we did want to give is, that's why we gave the EBITDA and free cash flow opportunity, which we think are both conservative as it relates to the $1 billion in revenue, just to give investors the idea of how great of a partnership that is to them as the shareholders of the company. But beyond that, from a competitive landscape perspective, it wouldn't make sense for us to share more than that. So that's on that perspective. I don't want to speak on behalf of Yahoo. What does that mean to them? I can tell you from a partnership perspective, it means nothing to us. We think it doesn't change the plan. The teams are hard at work. If anything, everyone has more focus. So I think it's a net, not affected the partnership in any way. If anything, I want to believe it helps us be more focused on making this successful.
Yeah, we're working closely with the Yahoo sales team, with Elizabeth, the CRO, and her team, and we're not seeing anything that is negatively impacting based on what they're doing to us.
Hey guys, Dan Day with B. Riley Securities. So you've talked a lot about how adding Yahoo sort of makes you a must-buy, along with the walled gardens in terms of the open web. You sort of go from a leader in open web native advertising to kind of an 800-pound gorilla with Yahoo. So just wondering if any of the publishers out there who might use a smaller competitive have sort of come to you and agreed with your thesis and are kind of doing RFPs or something along those lines. Just wondering if inbounds from publishers using competitors have increased since the deal was announced. Thanks.
Yeah, I can take it. It happens a lot. So in general, like 2022, even before the Yahoo partnership, was an amazing year for Taboola because we've taken a long-term investment, a few years back, that publishers want more than just money, right? So that means that if you're a head of a publisher, whether if you're head of revenue, a GM, a CEO, smaller publisher, bigger publisher, you want to work with someone that can empower everyone. Product teams to drive subscription, editorial teams to get insights about their content and what drives subscription. You want to think about the diversity of revenue. You don't want to be just in video or just in banners. You want some e-commerce and other things. So you're thinking about all those buckets of your mission as a publisher, and then you're saying, I can work with one good company, a Taboola competitor, many great companies out there, but they have not invested in technology like we do. We invest more. So they might get even more revenue if they're willing to make guarantees and things, but with us, they get great revenue. A lot of time we believe it's 30 to 50% more than anyone else. And then they get technology at no cost that makes them drive audience growth, engagement growth, and revenue growth. So I think regardless to Yahoo, since Yahoo, we got a lot, I mentioned FOMO, we got a lot of publishers, I think asking themselves how we can be part of this new iteration of Taboola. How does that help us get more audience? Can we get more revenue from this? What happens when advertisers launch, Yahoo advertisers launch, when advertisers of Yahoo launch in Taboola, if you're a Taboola publisher, your revenue will go up. If you're not, it's like a marketplace, If you're not, you're steady. So you want to go up. So we've gotten a lot of interesting inbound emails from senior folks. Many we've been in relationship for a long time. I mentioned some of our publishers who left us came back. Some were liberated to work with us because they work with someone else, and some work with us for the first time. So I do think it's only the beginning from that perspective, but we have the hard work of executing and growing in all the directions we talked about. But I do think it's going to become irresponsible not to work with Taboola as a publisher in the future.
So I think we have time for probably one more question. Unless it's a quick one.
No, it won't be a quick one, but it'll be the last one.
All right, then it's for Eldad.
So let's start with my second question then. So the features that you guys are building for Yahoo, right? It seems like you guys are adding incremental products, features for advertisers. Just talk about what this means in terms of additional features that are available for everyone else on the network, right? And then I'll just sneak in the second one. So Yahoo's probably your most logged in publisher, right? Again, what does that have to do with everyone else that's on the network, right? So, if I'm in fantasy, you guys know my email address. What does that do for CNBC? Is that a big deal, or am I overthinking that?
And then you want to start?
Yeah, starting with what the feature set does to advertisers. The way we're looking at it right now is advertisers are using specific features. For example, a feature may be a specific format that is not supported today. What is the opportunity of that format on the network? There is opportunity. That's part of the synergies of doing this. But we're not assuming a significant opportunity out of that right now. The core view is we need to support it to just migrate those advertisers into the network. Some of those features definitely have opportunity. We didn't do the work of analyzing the exact size of that opportunity on the Taboola network.
Is that an easy lift, or is that something that is not really, I'm overthinking it?
Since we're still uncovering the exact feature set as part of the planning, it's not something we could have done anyhow. I think once we're done with the planning, we will see a handful of such features that actually have an impact, and we'll double down on those, but I don't know to quantify that now.
To your other question about logged in users and driving yield. So I don't think it's as much about the logged in user as it is about the depth of data we get. So I mentioned I'm a Rivals user, which is a Yahoo property, I hope they still are. And I'm a Yahoo Sports user, and I'm a Yahoo Finance user, and Yahoo's my homepage. They get so much data about me, depth of data. So, Taboola tends to see people, what's the latest statistic? 2 to 3 times a day?
Yeah, almost 600 million people a day, and 2 or 3 times a day.
2 to 3 times a day. Yahoo sees me 30 times a day. So it's really about the depth of the contextual data that we're getting to understand that somebody who's, reading about fantasy sports, when they click on something, they tend to click on these types of articles or these types of links. Or when they come back to Yahoo the next day, they also correlate with people who read financial articles or something like that. So it's really the depth of the data more so than the logged in user. But that depth of data is what Adam referred to. We do believe that's going to lift all boats on our network, and also the advertisers we're bringing across. So, having all of our advertisers spending on Yahoo's supply is going to raise that yield. Having all of their advertisers being able to spend on our supply is going to raise all boats on our network currently. So we do think the combination of the data and all the additional advertisers kind of raises all boats from a yield perspective. And I think that's a perfect question to end on. So thank you, everybody, for coming. Let me also... No, feel free. Okay. Thanks for coming. I do want to remind everyone that we have some demo stations set up. So in this room, there's 2 stations at the back on either side of the coffee station. At those stations, you can see what Yahoo native ads look like. I think a lot of people don't realize which ads on the Yahoo sites are native. So one of the stations is for desktop, so you can see it in a web browser. The other station is mobile devices, so you can see it on the apps and you can see it in the mobile web. So I think it's kind of interesting to see those. And then in the other room, and please don't everyone stampede to this room, we have some demos that show how we're using generative AI, mostly very early stages. But we have demos of using generative AI for headline writing and also for even image generation for our advertisers. So please stick around, check those out. We also have food outside. I don't know how good it is. I haven't tried it yet, so I make no promises, but hopefully it's good. But thanks, everyone, for coming. We really appreciate it. And if you want more time, reach out to Rick or investors@taboola.com. Thanks, everybody.